going to now move over to Mandalay Resources. We have with us Edison Nguyen. He is the Director of Business Valuations and Investor Relations. Mandalay is a Canadian-based resource company. It operates gold and antimony mines in Australia and Sweden, and it focuses on increasing production and reducing costs to generate positive cash flow. Edison, please come on stage.
Thank you. Hi, everyone. Good afternoon. My name is Edison. As mentioned, I'm the Director of Business Valuations and IR at Mandalay Resources. I'm here and excited to talk about our vision and strategy and how we plan to be the next mid-tier gold producer in the space. Customary with all presentations, please look at the forward-looking statement at your leisure. The one thing that I will note is that all currencies referenced in this presentation are in US dollars. So first off, who are we? As mentioned, Mandalay Resources is a debt-free, diversified gold producer and antimony. We're diversified not only in jurisdiction, but also in product. So we have two operating assets, one in Australia that produces gold and a critical mineral antimony. Our Australian property, the Bale mine, produces gold only. About 18 months ago, we had a transition at the executive level. So the new team brings in a track record of value creation and growth. Since the inception of the company back in 2009, we've shown consistent, cost-effective resource growth. During the first 9 months of this year, we've been able to generate about $45 million in free cash flow. To put this in a broader context, since 2019, we were in a net debt position of $60 million. As of Q3 of this year, we are $55 million net cash, so that means we have $55 million in cash and no debt. So Mandalay's vision is to become the next mid-tier gold producer. How we're gonna do that in terms of the strategy is kind of the three kind of workflows. The first one is that we're gonna continue doing what we've been doing in terms of producing and generating strong free cash flow at our operations, then in turn redeploying that capital back into the ground and self-fund our exploration programs at both operations and growing our production profile organically that way. The third prong of the strategy is through mergers and acquisitions. So we'll look at asset purchases or talk to kind of like-minded companies that feel that they are equally undervalued as us, and then merge and grow by scale that way. So in terms of criteria, what we're looking for, we won't diverge too far from our core competencies. So the next asset that we look at will have to have a precious metals component to it. We'll look at jurisdictions are kind of in the same ranking as ours in terms of tier 1 and being safe. So that's North America, South America, or Scandinavian countries or Australia. In terms of where they are on the development cycle, we look at kind of near-term producers or companies that are already producing. In regards to our capital structure, our share price has actually increased about 8 to 9% since the time I submitted this deck. We're currently trading at $3.60 Canadian, which translates into 344 million Canadian or 240 US. The graph on the right there shows that we've done quite well since the beginning of this year. We've been trading better than the spot price of gold and also the JDXJ. And I'm pretty sure all the people here on the stage feel that they're undervalued. We're no different. Depending on which analyst you subscribe to, we're currently trading at 0.4 to 0.6 of our current PNAV. In terms of our key shareholders, we are tightly held, but in terms of support, it's there. 25% is held by our chairman, Bradford Mills. 20% is GMT Capital, which is a hedge fund based out of Atlanta. Ruffer, based in London here, and Asvalor, based in Madrid. As mentioned, March last year, Fraser came on board and he decided to become our CEO and president. Soon after, He hired Scott Tropolcock as the Chief Development Officer. Him and Fraser have had a previous working relationship at Nevsun, where they were able to grow that company into a multi-asset producer, which eventually got sold to Xinjiang Mining for north of $1 billion. Newest on the team is Hashim Ahmed. He previously worked at Jaguar Mining and Nova Royalties, previously as CFO as well too. In regards to our production centers, like I said, we produce in two areas, both top tier, safe jurisdictions. If you look at the maps on the left, our CEO Fraser likes to mention that we are producing in the shadows of giants. So at Costerfield, we're located in the Bendigo region, the Ballarat Gold Belt. We're just 30 kilometers away from Fosterville. In regards to our Swedish operation, the Björkdal mine, it's located about an hour plane ride north of Stockholm in a town called Skellefteå. We're about 11 kilometers away from the Boliden mine. In regards to our production profile, we're looking to produce about 90 to 100,000 gold equivalent ounces this year. Let's say at a cash cost of $1,200 and an AISC at 16. The good thing about our production profile is that there's no encumbrances, so it's royalty free and no streams attached to it. At the bottom there, you can see that consistently over the last 4 years, we've produced around 100,000 gold equivalent ounces at healthy margins. With those margins, we've been able to strengthen our balance sheet over the years. So like I said, at the end of Q3, we have $55 million in cash, 0 debt. We also have an undrawn credit facility with Scotiabank at $35 million, which expires in 2027. And over the last 3 years, we've been able to generate over $200 million in operating cash flow. There's a lot of information on this slide here, but the key takeaway is that we've been able to historically replace our resource and reserves at cost-effective rates. At Costerfield, our total discovery cost for M&I resources was around $42, at Björkdal around $15. So for Costerfield, we purchased this asset back in 2009, so we've been operating there for the last 15 years. Our life of mine has always ebbed and flowed between 2 and 5 years. We're currently at 3.5 years at the moment. Björkdal, it's kind of a longer life situation at 9 to, well, it's really 8 to 9 years. In terms of the graph on the left-hand side, the key takeaway there is the gold area is our total resource mapped against our cumulative depletion. So if you look at kind of 2019 when we started to be in the Ewell deposit, which I'll speak to in a moment, and generate all that free cash flow, we've been able to redeploy that at Costerfield in our exploration program. Björkdal has been fairly consistent around $4 million, and I can tell you why in a second. So now moving on to our asset-specific slides. So in 2024, we're estimated to produce around 50,000 gold equivalent ounces. So we're looking to mill about 140,000 tons this year at a gold grade of 10 to 11 grams per ton at a antimony grade of 1.5 to 2% antimony. We have good cash costs and a very healthy margin at $1,300, so our margins are around 50%, give or take. So in regards to the exploration spend, we're looking to spend around, let's say, $10 million near mine. So when we started producing here back in 2009, we started at Augusta, and then we slowly moved northwards to Ewell, where we currently are right now. For context, Ewell, the lowest extent, is around 650 meters, 700. We were able to extend Shepherd by another 100 to 150, so the lowest extent is around 800 at the moment. In regards to increasing our mine life extension there, we're kind of going back to the old workings and going back at Augusta and Cuffley. So the Cuffley Deeps and the Sub-KC. We're also doing a lot of regional exploration as well too. So that's kind of to the east and west of the Central Corridor. I should mention that that long section there is what we call the Central Corridor. So we're just doing east and west exploration to true blues and browns. Just quickly on antimony, because it's quite a topical metal this year. At the beginning of 2024, the spot price in antimony was around $11,000 per ton. It's north of 28 at the moment. Historically, the common uses for antimony has been flame retardants, and slowly it's been used for more transitional green energy, i.e. Solar panels and solid-state batteries, but it's also a huge component in strategic and defense metals as well too. In regards to supply, majority of the supply comes from China and Russia. We account for maybe 2 to 3% of the total global production in antimony, so we are the only significant Western producer of antimony. Moving towards Björkdal, we're looking to produce around 45,000 ounces of gold this year. Björkdal is the total contrast to Costerfield, so it's 10 times the size, but 1/10 the grade. So we're looking to process around 1.4 million tons per annum, but the gold grade is only 1.5 grams per ton. Because of that, our margins are a little bit lower, but it's still quite profitable at these current gold prices. In regards to exploration, we're only looking to spend around 3 to 4 million. The reason for that is that, like I said, our mine life is long at 9 years, so we don't want to find more of the same stuff. We're just looking to try and find higher grade pockets and better margins. We purchased this asset back in 2015. It used to be a open pit and underground mine. This operation has been in producing since the last 35 plus years. So when we acquired it, we actually shut down the open pit and started to just concentrate on the underground. So the one kind of constant theme with this particular operation in terms of the geology is if you look at the blue shaded area, that's the marble contact. And whenever the vein would rise up and butt against the marble contact, that's where the grades will die off and peter off. So essentially, we would kind of concentrate below that, but in 2019, we decided to do an exploration drive program above, and that's where we found the Aurora Zone. That's where the bulk of our material is coming from, and then also we've been doing a lot of exploration around the eastern extension. That's where we'll anticipate getting better margins due to the fact that the grades are a little bit higher, and that's marginal, so it's like 1.7, 1.8. At this type of operation, decimal point matters. Yeah, so just in conclusion, Mandalay Resources is a diversified producer, gold and antimony. We operate in 2 safe jurisdictions. There's a proven leadership team to drive growth there, cost effective in terms of replacing resource. Like I said, Costerfield is $45 per ounce. That's about 1% of the current spot price. Strong cash flow, $45 million over the first 9 months of this year, looking to close around 60. And then we have $55 million in cash with no debt. So thank you.
Any questions for Edison? Okay, Edison, thank you. It shows how thorough you were. You covered it all.